Welcome to Trading Lounge and the European Indices for the 8th of March, and starting with the DAX here on the 1 hour chart. As you know, we've been expecting a bit of a top here across the what we call the medium level, 11,500. The current move down through here, we need to be a little bit mindful in shorting this because we know that it's a corrective move to the downside. But what I want to talk about are the levels that it can move to the downside. One of them is 11,400 and the other one is a bit deeper into the 300 and the 200 area through here. So we'll need to see how the price action pans out through there. But in terms of the short trades here, we can use the 11,500. So we can go short under this one here, we can go short here. One of the problems with this though is that the market just may come to 11,400 and then move up from that point, and I will explain that in a moment. Even if we have this scenario here, if I could squash this in, this is wave 1 over here, wave 2 here, then wave 1 up here, and wave 2 here to the 50-60% retracement level. That's where we can look at it, but sometimes it just comes to the wave 4 of one lesser degree. And I also have a wave count that can take it that far. But just before we go there, we'll just look at the tick chart here. This is 100 ticks here. So in a nutshell, what we're looking for here is we can see that the market's vibrating across the 11,500 area through here. And sure, it may go up from here, but if it takes this low out here, then you can go short. You could even go on this low through here. I'm just going to remove these because in case I don't see them there again, I'll leave them there. And the other point to this is that it's just drag a little bit of so this is another count we're going to be looking at in a moment, but this is one of the reasons that we could short this one here, wave 3, we can do that, but we're just talking then about looking at this particular trade within this space, it taking this low out here or this low out here, because it's in a nutshell, it's on. You need to be on the right side at the right time. So what does that mean? You find the closest largest number, and you don't want to be short above that closest largest number, do you? Because that would be support, so you want to do it under it. So you'd be looking for short trades under it, and you could even go long above this one here too if you wanted to do that. Okay, so you just need to be trading the right side of that. This particular count that we've got here enables wave 3 up here with an A wave here, B wave over here, then 1 and 2 and 3 and 4 and 5 here. So it could end within to the wave 4 of one lesser degree in this area through here. So you just need to be a little bit mindful of that thing, and just to sort of look at that in the bigger picture. I take this back to the 200 and we're on the hourly chart here. So that's taking that little low out through here. That would make sense. And you could also take this low out. But taking this low out here would be a little bit tricky because the market would come down and there'll be orders there. So it would bounce back off that. So you would need to work that a little bit lower. But that 11,400 is the is a possible this wave 4 low here. When I'm counting this up here from wave 2 and go wave 1 and 2 here, and then basically all the way up to here, yeah, it just gets a little bit difficult at that point. So let's go to the 2 hour chart. This explains it a bit better. So wave 1 here, wave 2 here, then wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave here, the fifth wave here, and the fourth wave here from 3 to 4 here and wave 5. So that brings us into this other picture here, which will take us down much further into this space. So that's possible as well. I just need to see the price action here hasn't been very sort of clear. And normally when we're looking at a corrective move, so let's just draw it here for a moment. So the market moves up, and then it comes down sharply here, which is this one here, sharply here. And then that's what a normal A wave does, and then the B wave could be complex. And the C wave here, see it's on more of an angle here than this one here, so it's telling me that it's sort of reluctantly moving down. So it can quite easily move up from that point there. If this one here, the wave C or 3 here, if it was moving down sharply here in line with wave A here, then we would consider it a third wave at that point. But anyway, that's just the sentiment. Let's just see how this, plays out here. Being below the level, we need to be on the short side. So if you're going to trade, you need to be on the short side. If it's above the 11,500, you need to be on the long trade. The other point for this too is that this little wave 5 here is a little bit short compared to the wave 1 here. So this is where we can put, if I can move that wave 4 over here and this wave 4 here and this wave 5 up here, making this wave 3 here, which would be on the 4, which I've got this on the 4-hour chart, which looks like this here. So from this wave 1 here, an A and a B and a C for wave 2 here, then wave 1 and 2, and all the way up here for wave 3, it kind of makes a little bit of sense. And then the wave 4 would come back down into the 11,400. So in a nutshell, we're either going to get a move to the 11,400 and then move up, or in wave 1 or 2 or 5 here, it doesn't really matter, and then would need to be long back above the level here for this. Okay, so when this plays out down here, comes back and gets support here, then we need to be long from that point. If it doesn't get back above the level there and it's going to find the 11,400 as resistance, then we know it's going to come down for the wave 2 even lower here. Okay, so there's a couple of steps involved. They're all really quite simple, and if you keep them simple, you'll be okay. So the first one is getting down to the 11,400 and getting out. Wait for the bounce, and if the bounce fails and the market moves through the 11,400, well, then we can short it again downwards. If it doesn't find the 11,400 as the resistance here, then it's got a chance of moving up. So in the fact of it moving up here and finding support on the 11,500, then we need to be long from that point. So if you keep it simple, then that would be fine. It hasn't been a very nice structure to the upside here for this particular market, and it's just delivered a few different counts, but we have a few things to work with. In the bigger bullish picture, we can see that this is a corrective pattern occurring at 11,500, the medium level, a really important level. So it enables us to look to go long. Once it pokes down below the level here and then finds support here, then it will be quite a safe trade to move to the upside for this market. For the UK here, I'm just going to go into tactics here because it's in a bit of a different pattern. So in this case here, we've been long from this point and getting out at 72 with a stop here, so we don't need those anymore. Once again here, we can copy this here and put that under this low here to go short here. And that would leave us with a stop here. So when the stop here from the top to the bottom here, you want to leave it above the 61.8% mark here, because it can certainly have a little flick here before moving back down through here as well on this case. If you're going to short down here, then 7,100 is the aim through here. If this low here is taken out here, if this low is taken out, then we can label this here as a corrective move to the upside. I need to go up one more degree on this, but put that back here, grab that, and that makes an ABC there because we've got 5 waves here and we've also got 5 waves here. It could be wave 1 and 2 here and then wave 1 and 2 here, but if this low is breached here, then that won't be the case. While that low stays in here, then we could also call this here wave 1 up here of 1 degree higher, of course, and then we can also have this, copy this here and have that wave 2 sitting just in here. But if that's breached, then that's not the case. Okay, so it's really just about tactics with this particular market at this stage here. And then we've got the CAC here, the French market. So I've also labelled this like I've just explained with the DAX. in that this can be a wave 4 here in terms of an A and a B and a C here. But it doesn't really matter at this stage here. If this low here is breached, then we can go short from this point. Okay, so that's what you want to be doing at that stage. It's already had its bounce, so it's moved up through here and run out of steam and then drop back low below here. It will also do the same again. It will come back to the lows here again, and it will come back up 50 or 60%. And then drop down again, and then it may even do it again into that thing. There's like a ball bouncing, hitting the ground and bouncing and then dropping, you know. So if the 5,250 becomes the retested resistance, then you know where you are and you can short from that point there. Also too, the MIB, it's got its own little pattern here, so the same thing applies here as well. In this case here, this has been the high, so this has been a bit different from the DAX. But if this is an impulse wave to the downside here, then we could look at this here as an A wave, a B wave, and a C wave to the upside, an A and a B and a C, that can come back up to the 20,800 area through here. So in terms of shorting, then using this low, the second low, which may be this one here, if it does move up from here, if it gives us an ABC here, I've just done it here visually, an ABC here, but you can apply that to, you know, to that low here, and wherever that second low is that comes into play to look to short at that point. Otherwise, if this just drops straight through here, then we need to be short below this move here. Let's just go to the bigger picture here. We haven't seen that for a while. So with this low in place here from the Christmas run here, you know, with the US markets, we've got wave 1 up here and wave 2 here. With the DAX, we've got a count that's got 1, 2, 3, 4, and 5 here for wave 1 and 2. And then this one here can be wave 1 and ABC back here for wave 2. So that will be the 50-60% retracement level. So we can expect support to come in on the 20,000 anyway. So you can short down to this point as such. Then, yeah, the 2 target points, whichever count we've got here, we've either got moving back to the 20 or we'll be going lower from that point. I won't know that until I start to see some of the structure in this space fill out from here. So I don't know if I've updated the 4-hour chart. I've just got it like this here. So yeah, so the same as the US count here pretty much. But yeah, look, shorting this low out here would be the go. And that would keep us safe. So going back to the hourly chart here, there's only one problem with all of this, and that would be that the market can find support on the 20,500 here as a wave 4 here. That's the only catch here. But what we want to do is we want to be short anyway. We can also see too that the 2100 here is important. It's a minor level, so major level here, 20,000, then the 1, and then the 2 up here, and then the 23,000. They're all minor levels. So now we're talking sub-levels in here. So when we're working with the 21,000 here, we're working with, we need to go to group 1 above, so just going down a degree, so 1, 2, and 3 here, just like we went to 21,000, 22,000, 23,000, the same here, but in hundreds, 100, 200, and 300 makes group 1. So group 1 is important here, and also group 2 is important here. If this market is going to correct across here, vibrate at the 21 here and have corrections, which it has done. It's called the arrival here, and this is the reaction here. As long as this market pretty much doesn't find this group 2 here as the resistance, it can spike down through here, right? But coming back up here, it needs to get back in and go that way. If it finds this is the resistance here, and then takes that reference point low out, then it's rejected this level, this group 2 here, which means it's rejected the 20 here, the 21, and then it will be looking lower from that point. It will look down to 20,000 at that point. So we can't say that group 2 here is the resistance so far, 65, 72, and 80. It's not the resistance so far. So the market can move up from this point. So Just bear that in mind when you're trading this. You know, it's the same with all of this in here. It never left group 2 here, so it's still bullish. So this is still bullish at this stage too, because it hasn't got group 2 here as the resistance, and that's what you'd be looking for. So when you're working with large numbers, you can make the idea with trading, in my mind, I'm just pretty simple, is that you would trade from 20,000 to 21,000, and you can use the sub levels moving up here like 100, 200, 300, 500, 800 and so on. Yeah, so what you don't want to be doing is, if you've made money in the trend going from one large number to the next large number, that's great. What you don't want to do is start to get chopped up and lose the money that you made while the market's vibrating at this number here. So understanding the importance of group 1 and group 2 here is essential to keep you out of trouble, basically. All right, thanks for tuning in. Cheers.